Association of Alberta. Yeah, I just need to get this. Okay. My name is Ayo Aileye, and I'm the Director of Capital Access at Alberta Innovates. Alberta Innovates is a crown corporation of the government of Alberta, and we are focused on delivering on the technology and innovation priorities of the government of Alberta. And we do this through several mechanisms. We support the ecosystem, we support startups through capital coaching, and we build a community around them. So today, we are privileged to have a distinguished speaker who brings a wealth of knowledge and expertise, and will be talking to us about how the Alberta Securities Commission is relevant to startups. So I'll just do a quick bio of our speaker today, then I'll pass it to her. So Tonya is a seasoned legal professional with the Alberta Securities Commission, whose passion, wisdom, and pragmatism make her particularly well-suited to presenting today's webinar. And this is a topic most people would rather not think about, just like Tonya mentioned earlier. There was an in-person event here and it was sold out. But it's nonetheless very important to startups and businesses. Tonya started her legal career as a lawyer at Osler LLP, where for almost a decade, she practiced securities law, did M&A deals. M&A is mergers and acquisitions, and advised boards and management teams on governance issues. She then moved into the energy space, where she was general counsel and vice president of 3 TSX-listed companies. In her role at the Commission, at the Securities Commission, Tonya leads the private markets and innovation team, where her focus is on the capital raising activities of private companies. She helps small and scaling businesses understand the role of the Commission, of the ASC for short, the basics of securities law, and how to go about raising capital. She gets it, and she fully understands that founders are often on a shoestring budget and trying to do things without the benefit of sophisticated and expensive advisors. She really wants to help them get their financing across the line. So enough of me on the screen. I'll pass it to Tonya to take it from here. And she did say she loves being interrupted while she's making a presentation. So, and I said, yeah, you wished for it. That's what's going to happen. It's going to be a fun conversation today. So feel free to interrupt and ask your questions. I'll be watching the chat section as well to highlight questions as we move along. So over to you, Tonya. Thank you.
Thanks, Ayo. Yeah, thank you very much. That was a nice introduction. And yes, as we go along, feel free to just stop and ask questions. I always prefer that rather than people waiting till the end. And by then we've kind of passed by the slides, or people are on to different ideas or questions. So don't hesitate to just interrupt. And then, of course, always the caveat that views expressed here are mine and may not necessarily reflect those of the Commission. And then, of course, I am a lawyer. I'm a securities lawyer, but we do not at the ASC provide legal advice. We provide guidance. We try to help people understand what the rules, but nothing I say can be relied on as legal advice. The standard. Just as an overview, so we'll talk a little bit about small business and venture capital. We'll go through into the securities law concepts, talk about what the ASC and the CSA does, and then we'll just talk about some of the prospectus exemptions and some compliance issues to watch out for when you are doing a financing. And this presentation really is geared toward founders, so people who are starting, who are doing a startup and looking to raise capital. So that's kind of the perspective from which I've approached the presentation. And of course, I'm sure if you're in this seminar, you're a believer in this, but small business matters. It's a major contributor to the economy. And when we look at innovation in an economy, I mean, you see how innovation grows. It's typically small businesses are formed, they're trying different things. They attract capital that understands the risk associated with small business. And people are looking for those big wins to come out of small business, especially in the VC space. There's lots of people. This is an area where you have very well-educated people. Professional, scientific, and technical services is the sector with the most small businesses, actually. And there's small businesses are of course risky, and we all know that. But surprising stat that most small businesses actually do hit the 5-year mark. So it's it's capital makes or breaks. And when you have a small business and you're trying to do something innovative, being able to raise that money, it really matters. The VC space, of course, that's where we see that nurturing of innovation. People who understand that you need to kind of come together around founders. You see it, but lots of founders have such cool ideas and they're really good at what they do, but they don't always have all the skills that they need to run a business. So the VCs that have that helping hand approach and help to introduce them to the right people, help them as they hit the hard spots along the line. I think that's really valuable. And the other thing, of course, is some of these businesses are going to fail, and ideally they fail fast. And then as a VC, you can focus on the businesses that are going to get through that hump. And of course, it's risky. Like, this is risky. Lots and lots of small businesses they don't make it, and so the VC space is important because you have to understand that you have to take that risk if you're going to invest in this stage. And of course, VCs are often looking to exit. We used to say, via IPO, going public. I mean, we don't see much of that anymore. Often it's a merger, a sale to another business, or often it'll be a secondary sale to other investors. So we'll kind of get into some of the introductory security law concepts and the role of the ASC. So just fundamentally, if someone's investing in your business and they are expecting return, then you are probably issuing securities. And that if you would just step back and you just think about that, whenever you are taking money from somebody, where they want to invest in you, but they hope to make money in return, so they're not giving you a donation, you just step back. That's when security law applies. And those rules, they're out there to protect investors and really the whole idea of the integrity of the capital market. When people believe in the capital markets and they have an understanding that people play by the rules, they're way more willing to put capital in. So the whole, this whole regulation space, it matters because we need integrity for people to invest. The ASC, of course, is the agency responsible for administering securities laws in our province. And the whole idea, it's sort of a twofold thing. It's to foster a fair and efficient market and to protect investors. So two sides of the coin. And we really are, you're trying to do both as you go along here. Mission statement kind of stuff. Bullet 2 is we're trying to ensure that the capital market works for people. So some of what I do is when I'm talking to small business and they're struggling with something, or they're just saying this exemption that you crafted, it just doesn't work, and here's why. I'm interested in that. I want to hear that, because what we try to do along the way, we'll sometimes have exemptions that are almost like test cases. We'll put them out, we'll see how people are using them, if they work, and then we'll amend them. So feedback is important, and we hear it, and we change things accordingly. And of course, the other side of it is just making sure that people who are taking money from people are registered and they govern themselves, to professional standards. you'll hear sometimes people talk about the Canadian securities administrators, and there's some confusion there because, of course, we don't have a national regulator in Canada, unlike the SEC in the US. Here we go province by province, and you are responsible for security laws in your province. But we have a CSA, Canadian Securities Administrators, which really is this umbrella body that tries to coordinate securities regulation across the country. And tries because it's hard to do. It's surprisingly hard to do. But it's unfortunate, I find, because it's really hard for a company when you're trying to raise money from investors across the country. There are different rules in there, in many jurisdictions, and that's tough. And that's often where it's very difficult to do this, to do a capital raise and to do a very broad capital raise without using a securities lawyer, because the laws are nuanced and they're different, and it's hard to figure them out. So harmonization is ideal, and that is, part of the goal of what the CSA does, is try to get the jurisdictions together to harmonize those laws. Within the public, for public companies, we have what's called a passport system, and that is fantastic. So that means that you can deal with your principal regulator. So if you're regulated by Alberta Securities Commission, even if there's an issue in Ontario or the OSC has a question for you, see, whoever, you can deal with the Securities Commission of your province, and it allows you to build some relationships there and have people to kind of help you navigate this on your behalf. Alberta, of course, is a big capital market here. We're one of Canada's most important capital markets. We regulate both private and public companies, and that's one of the things that I have that in this presentation a few times, because it is one of the misconceptions, especially when talking to kind of smaller businesses. They often have an idea that because they're private, securities law doesn't apply to them, which that's not the way it works. And there's been a lot of money in terms of private money that have gone into Alberta companies. So when you're raising money, there's the use of a prospectus or a prospectus exemption. I'll talk a little bit more about what that means. And then the company has to comply with both the law of the jurisdiction where the company is based, and that usually is where the head office is, and the jurisdiction where the investors are. So if you're an Alberta company and you're raising money from a shareholder or an institution in BC, you have to also comply with the laws of BC. And then somebody else comes in and they're from Manitoba, and now you need to comply with the laws of Manitoba or Quebec. So that's where the complications come. And of course, that's often how it is, because it's rare that you're raising money only from just your own jurisdiction. Yeah, and so a lot of the work that I do is talking to people who are raising money, understanding where their challenges are. And as we modify pieces of securities law over time, we try to take that into account. Some basic key terms, public company, generally listed on a stock exchange, and the securities are freely trading. Private company, obviously not listed. And those securities, they're not freely trading. So the only way that those securities can trade is if there's an exemption in order to trade them. And I'll talk more about the whole idea of a prospectus versus prospectus exemptions in a bit. We use the term issuer, which is like a company. And that could mean a public or a private company, but they have securities or shares that are outstanding. The prospectus is it's a formal disclosure document. It's very long and detailed, and they're expensive to prepare. I don't know that you could do this. You could get through a prospectus without some lawyers involved. Reporting issuer just means a company that has raised capital via a prospectus. So they have actually gone through that work. And those are typically, reporting issuers are typically public companies. And then security can mean all kinds of different things. It's, you know, what you typically think of where there's shares, there's debt instruments, notes, but also things that are convertible into shares. So some, you know, there's SAFE is a simple agreement for future equity. There was an idea that if you did a SAFE, which was an agreement that a lot of small businesses do because it's quite inexpensive to issue securities that way. But there was this idea that, oh, I'm doing a SAFE, and so there's no equity because it's future equity, so I'm fine. I don't have to comply with securities law. It's not a security. It is. So this idea that when you give something to an investor and it's going to convert later into a share, that's a security. You still have to comply. And then trade is just this kind of general term, but it's sale of securities for consideration. But it also ropes in acts, advertisements, conduct. So trying to get a trade, trying to get a sale of a security is also considered a trade. So general terms. And then this is one of these, if you understand kind of the two key pillars of securities law, you kind of come away with like a general understanding of what it is that the ASC does. So there's two fundamental requirements, and one is the registration requirement, which is that if you're in the business of trading, if you're in the business, you're selling, you're advising in securities, you have to conduct yourself professionally and competently, and you generally have to be registered. So that is like your guy at BMO, Nesbitt Burns, who you give money to and he invested, and you meet with him once a year and he tells you, you know, well, market was really bad this year, but you did pretty good, you know, that kind of thing. And then the other pillar is the prospectus requirement, which is founded on the idea that investors need timely, accurate information on which to base their investment decisions. Now, small business and venture capital typically use exemptions and carve-outs from these requirements. So these are kind of where the starting point of the requirements. You have to be registered and you have to issue a prospectus. But these are expensive things. And so, you know, for a public company, yeah, you need a prospectus, and then you have this ongoing disclosure obligations with your shareholders, registration requirements. If you're going to work at BMO Nesbitt Burns and you're going to have like a big book of business, you're going to be registered. But we have this other sector of the market, which is small business and venture capital, where we let people operate with exemptions from these rules or carve-outs from these rules, but under certain conditions and guardrails. And just to get a sense of, you know, the amount of activity in Alberta, so prospectus, so you've issued shares through a prospectus, those are freely trading shares, or you're using a prospectus exempt process to raise capital, so that's private deals. You kind of get a sense of this is billions of dollars. So this is 2022 data that I pulled up, and you know, 8.1 billion in prospectus exempt financing in the province versus 9.6 billion in 2022. And so public versus private is kind of an easy way to think of it. And those, I think we've kind of hit on this already, but these kind of go back to these fundamental requirements. So registration and then prospectus. Okay, and just this is always something that our team here, especially our enforcement team and our investor education team, always ask me to just give a little plug at some point in the presentation for the Check First website. Now, this is not dealing, I'll talk more about kind of the exemptions and carve-outs that apply to small business and venture capital, but unless you're using those exemptions and carve-outs, there is a fundamental requirement that before you give somebody your money, so either you invest with them or they tell you that they're going to help you raise money for your company, that you just check them out to be sure they're registered. And you can go to the Check First website, which is like an easy thing to remember, Check First, and then that website will give you a link to get to the National Registration Database, or you can just Google National Registration Database, and it's just very easy. You either put the individual's name in or the firm's name in, click show me the details, and it will tell you where that person's registered. So if you put in your broker's name, you'll see that they'll, yeah, they work for BMO Nesbitt Burns and they're registered in every jurisdiction in Canada. When you put someone's name in and you don't find them, then that just gives you a bit of a pause. And maybe they're operating under a carve out, but pause and check, because that's where we see a lot of the fraud that happens in Alberta, is people who, they say they're registered or they tell you they're compliant and they're not. And we have these hearings that go on here where we have to take enforcement action against people, and it's just sometimes it's so sad to see how much money people have taken from Albertans, and sometimes it's just purely a fraud. And had those people checked, had they known to check, had they had if they're elderly, did they have a kid who knew to check? Yeah. So check first. And this is just one of those things that when you hear about other people before they hand over their money, especially if you have elderly parents, because that's all, there's lots of fraud that unfortunately is targeted at the elderly. So check first.
Can I ask a question, or are we allowed to ask questions?
Please. No, I want you to ask a question.
Just on this check first thing, does it just check the incorporation name, or is it checking individuals? It's
checking
like both.
Yeah, no, it'll be checking in. It's checking in. If you click on the individual tab, then it'll be checking to see if they're registered. So if they work, if you work for BMO, CIBC, TD, if you work for any kind of the, investment bank houses, you'll find them there. So if you put in your, the guy that you invest with, your portfolio manager at BMO, you'll find them there.
Okay. Yeah. Sorry, I misunderstood. This is for the firm or somebody that's registered to help you. Okay. Thanks.
Exactly. This is like before you hand over money to someone who says they're going to invest it for you and just, make these fabulous returns. And this is before we apply the carve outs or the exemptions.
Got it. Thanks.
Yeah. So then when we look at VC, and this is where I'm talking about a carve out. So the people that are at VC firms and the VC firms themselves are not registered. So that's okay. They're operating within the law, but that's the whole pause. If you are about to invest with someone and you don't find their name, then you got to dig a little deeper. Are they a VC? If so, okay. There's, you can actually, you can kind of go and verify that they're a VC by doing a bit of internet research, but you won't find that information on the ASC site because we're not regulating the venture capital firms. So these are the firms that they're typically raising money through prospectus exemptions. Usually, almost always from accredited investors, which are people who meet certain income or wealth thresholds. I'll get into that a bit more as we go along. They typically require people to agree that their money is going to stay invested for a certain period of time. So these are not people that are flipping in and out and expecting there to be a lot of liquidity here. They'll have expertise investing in and managing companies. They'll typically have an exit plan. And we don't require VC firms to be registered. We do look at a number of considerations, which is that we expect venture capital to take an active role in businesses in which they invest. So sometimes that's a board seat, sometimes it's appointment of management. Almost always they have a say in certain critical business decisions. They're not receiving compensation associated with raising capital or trading, but they typically do have a carried interest. So that's how the compensation plan typically works. And they're not providing advice in connection with the sale of securities. So any advice is kind of incidental to the active management of those companies. This is not like a daily thing. This is, they select a company that they want to invest in, and they do. And there's not a redemption rate based on a net asset value. So these are some of the criteria that we look at and say, okay, that's a venture capital firm and we don't require registration. Any questions on that? Because that is something that I know is confusing to people, the whole like, how come the VCs don't have to be regulated? So we'll turn now just to the prospectus exemptions a bit more. So again, this is where we let small business operate outside of that big picture requirement, which is that you need a prospectus in order to issue securities. And we do that because the prospectus process, the being public process, that's very, very expensive. And for a small business, you just can't play in that game yet. So you have to, you start out small, and we want that to happen in Alberta, across Canada. Small business is where, it all gets started, and those companies grow up as they go along. So it's much, much less expensive to issue securities through an exemption. Sometimes some disclosure is required, but certainly a lot less than a prospectus. And in some cases, no disclosure is actually required. There might be voluntary disclosure to investors, but some exemptions don't require anything at all. So there's always this balance between investor protection and economic efficiency. And so there certainly is an aspect of we need to protect the public because these aren't free, when you buy shares of a private company, they're not freely trading. So you can't just get, oh, I know I gave you that money to grow your business, but now I want to renovate my kitchen. So could I have the money back? It's not necessarily like that. Your money's often tied up for a long period of time. So, and people kind of refer to this as a private market or an exempt market, prospectus exempt market. The rationale for it is if the investors aren't the public, so we're not talking about just like a Joe retail investor that has, just a little bit of money kind of thing. So we'll often look, most of the time, people who are investing in private companies are accredited investors. And generally, we'd say rich enough to withstand the loss. They may have a relationship of trust with people that are running that company. They're experienced. They have acumen when it comes to investing. And they may be able to get disclosure outside of the typical prospectus. And the different exemptions that exist have different rules. So depending on what exemption the issuer, the company is using, they have to comply with those specific rules. And there's a bunch of different exemptions, but they're narrow, they're technical, they all have rules associated. And so if you want to use an exemption, you have to fit within the rules. Now, we do have a process that people use sometimes, which is that if you can't fit into one of the codified exemptions, you can apply for relief. So if the company is Alberta head office company, so it's regulated by the ASC, then that company would make an application to the ASC for what's called exemptive relief. So can you modify that exemption to help me fit my circumstances? And we would ask the company to justify to us why we would consider doing that, and are investors adequately protected if we do things like that. And then also through we can go across you can go across multiple jurisdictions to get that exemptive relief, but you do it via the ASC, so it's not as difficult as it would otherwise be. Most of the prospectus exemptions are in one place. So it's 45106, which is called prospectus exemptions. It's a national instrument. So again, most of the prospectus exemptions are harmonized or generally harmonized. But there are still some differences where when you're actually reading the rules, it'll say in Alberta, this, in Ontario, this. And so even within this national instrument, this mostly harmonized instrument, there's still differences. And again, that's why when people are doing a broad raise, they very often need the help of a securities lawyer in order to do that compliantly in multiple jurisdictions. Crowdfunding, of course, is something that, you know, lots of companies try to do. There's not a lot of money raised in crowdfunding. It's not like you can't just put it out on the internet and say, I have a really cool company, just invest in me. You know, crowdfunding typically still requires the company to build up interest and basically get the investors in advance before the crowdfunding actually starts. But there's definitely crowdfunding that's going on all the time. There's the platforms have to either be registered or be operating under an exemption. There's one platform. It's Front Funder, which is in BC, and they're really owning this business. So they're really doing a lot of the crowdfunding we see going through the Front Funder platform. And then we do have a number of ASC specific rules, and this is for investors that are based in Alberta or businesses that are based in Alberta. In a couple circumstances here, we actually have Saskatchewan just sort of tagged along with us so that those self-certified investor and the small business financing, Saskatchewan has the exact same blanket order in their jurisdiction. So for those two, we can have investors in Alberta or Saskatchewan that follow the identical rules. But typically when you see an Alberta blanket order, that's for an Alberta business that's raising money from Alberta.
Is this the same as accredited investors?
No.
Not at all. Okay,
no,
thanks.
No. So, and I am going to talk a little bit more about self-certified investors like later. It's one of the ones that I definitely want to talk about. I'm going to skip through some. There's so many prospectus exemptions, and unless people want to know all, about all of them, I'm going to just hit the highlights and then move on to some of the ones that I want to be sure you know about. One of which is the self-certified.
Okay.
Tonya, we have a couple questions from David in the chat. First question is, what might be an example of discretionary relief? I think it was in a previous slide.
Yeah, exactly. Well, so you can actually go on the ASC website and you can search exemptive relief applications, and then you can kind of see examples where there's a decision that's issued. So a company applies and says, so maybe I'll use one that I was aware of recently. So a company would have required to be registered for something that it wanted to do. It didn't fit within a carve. It wasn't a BC firm. It didn't fit within some of the carve-outs from the registration requirement. And they applied for exemptive relief and said, could we operate without being registered for a 3-year period? We will only deal with accredited investors, and we will have no more than 10 investors in this project. And whatever, they kind of set out the rules, and everyone's going to invest a minimum of 100,000. They're only going to be accredited. Everyone is going to sign a risk acknowledgement, so they're aware of, how risky this business enterprise is that we're going to do. And will you let us operate for a period of time without being registered, even though the rule says we should be registered? And in that case, we said yes. And here are some of the guardrails. So what you proposed, everyone has to invest a minimum of 100,000. Only X number of investors can participate, and it's for no more than 3 years. And then we gave that business permission to do something that wasn't otherwise required or wasn't otherwise allowed under the rules. So they applied to modify the rules, and we let them.
And the second question is about using exemptions if there are some limits on what you can raise and what those limits might be.
Some of the limits have to do with investment limits. So for crowdfunding, for example, there is a general limit, I think it's $2,500 per person. So you can only take a small amount of money from people, but anyone can invest using crowdfunding. So like anyone could just go on the internet, go to the crowdfunding site, click, oh yeah, this looks super cool, I want to invest in that. and they can put in up to $2,500. So there are, with some of the exemptions, there are limits. Crowdfunding has the smallest limit, because that's typically a relatively unsophisticated audience that's participating in crowdfunding.
Tonya, can I ask one quick question?
Yeah.
Yes. Is this being like? Can we get a copy of the recording of this?
I think it is. I clicked something at the very beginning that said, "Do you consent to this being recorded?" And I said yes. So I'm quite sure it is being recorded.
So we can get obtain a copy of it if we need to, because there's a couple of people I wanted to definitely I wanted to have part of the meeting, but they couldn't be in. They couldn't make it. Right. Okay, that's great. Thank you.
Yeah, I think so. Io, do you have more details on that? Who would they talk to or whatever to get it?
Yeah.
Yeah, actually, I'm recording right now, and I will send it over through BCAA for sure.
Thank you so much. Thank you.
Sorry, Tonya, just quickly, I was the one that wrote about the exemption limits. You noted quickly a number for crowdfunding, but under general securities raises, so just your normal common shares raising using exemptions like accredited. I wasn't even aware there were limits on that. It was one of your slides said, you know, there are limits, the difference between a public versus using an exemption. Or
so accredited investor has no limits.
Okay, they're trying to see what. Okay, so it's subject to the exemption being applied, is what you're suggesting.
Yeah, exactly.
Okay.
So it depends on which exemption the company is using.
I'll hope it's an easy search. I'll go and hunt for it, but unless you had a link, but otherwise, okay, I'll hunt
I've
around.
even got some slides on that coming up.
Oh, okay, then I'll wait. Thank you.
Yeah. Okay, so I'm just going to go through just like the basics, and you know, these are the general prohibitions when raising capital. Like there's very obvious things here, right? Perpetrating a fraud, making misleading or untrue statements, or failing to state facts. That's sometimes where people get caught because they try to be very positive in their materials when they're trying to attract investors. And this is the sort of thing that usually comes up after the fact. So an investor complains they lost their money. Say they invested in a small business and it was risky, as we all know, and they lost their investment. And they make a complaint. And at that point, then you know how it always is. You look back, and sometimes you know there's yeah, that was misleading. So you know, it didn't hurt at the time they gave you their money, but then later you end up getting in trouble for failing to give them all the information, not to make things misleading. And then of course things like, you know, unreasonable pressure. So it's a time limited deal, taking advantage of incapacity or inability, and you know, imposing really harsh terms. Like all those things are just not okay. And then things like making prohibited representations. So, you know, promising that it's going to be listed on the stock exchange, that's not within the control of the issuer. So even though, you know, the issuer they really want one day for it to be a public company, saying that, putting that in your materials, definitely offside. And then giving undertakings about future value or future price, or even just promising that there's going to be dividends, whatever, you know, you hope there will be, but you can't make those kind of promises. And you know, this is where enforcement division comes in, where it's later on, it's down the road. And so often when enforcement gets involved, it's because there's a problem. You know, people have lost a bunch of money and they're complaining, and that they're now asking the Securities Commission to do a deeper look. So you're doing this look back on what was provided to the investor at the time they invested, and you know, kind of. So when you're putting something out, just try to think of like the bad of, if 5 years down the road, if I ended up losing all the money of my investors, you know, is there anything in my disclosure that could come back to hurt me? Good to do that up front. Okay, so some of the most common exemptions. I'm going to talk about some of these, and then I'm going to talk about the self-certified investor and the small business exemption, which are Alberta initiatives. But you've probably heard of these ones because this is typically how people will raise money. Now, accredited investor. This is how private markets actually work. It's accredited investors, almost always. So when you see here, out of the 8.1 billion that went into private markets in 2022, 7.4 of that was from accredited investors. So these other exemptions that I'm going to mention, they're not used very often because they're most of the time, the investors that are investing in private markets are accredited. And I'll talk a little bit about what it means to be accredited, but that's how money is coming into Alberta companies from private investors.
Okay, I'm going to interrupt again. Sorry.
Yeah.
We have a question from Robert. What if the company offers a liquidity discount in the subscription? That is, if the shares are not listed within 12 months, then investors might receive 10% more shares. So in that scenario, how would it work?
Yeah, that's okay, because there's not a promise that they're going to be listed. So you have to be very, I would say you have to be careful in terms of the actual language in the agreement. But so there's a hope that they will be listed, and if they're not, here's the discount that will be applied contractually. But you'd have to just be very sure that there's not a promise being made that they will be listed. And in that case, it doesn't sound like it is. It sounds like, okay, we hope it will be, but if not, here's the contractual discount that we're going to give to our investors.
Thank you. I just wanted to mention quickly that Tonya is very happy with anyone coming up and interrupting her to ask questions. But if you're unable to do that, you put your question in the chat, I'll monitor that and I'll get Tonya's attention too.
Can you comment on 2018? Last slide, the significant difference between 2018 on 1.4 billion and other.
It's a good question, and I don't actually know. I'd have to go back and have a look and see what was it in 2018, because it's other exemptions. So I don't know. I'll have to look.
Yeah, it's just huge compared to 2022.
Yeah, exactly. Yeah.
Yeah. Okay.
Yeah, I think the question there, was there just a few handful of large exemption transactions, or was there actually a change in the regulatory environment at that time?
Yeah, good question. To be honest, I haven't been at the ASC very long, so I don't know. I'll go back and look, and then I'll get back to you.
And Tonya, just one quick question on this chart here. This is just the list for reporting issuers in Alberta, correct?
No, this will be actually, I'm pretty sure I pulled this from only non-reporting issuers, so private companies.
Okay.
Yeah. Public companies can also use exemptions, but I'm quite sure that this data came from private companies using exemptions. I should have, I'll make a little star in my presentation so that I note that next time. So as companies kind of go along, like they'll very often use a private issuer exemption. I'll talk a little bit about that as well. Friends and family, accredited investor. And then as they grow, they'll start to use some of the other exemptions. But the one exemption that you see all the time, like as you go, it's the accredited investor exemption, which again, that's where almost all the money comes into private companies. Private issuer exemption, I'll just touch on. So this is an exemption that I just call accidental compliance. If a company is a private issuer, they don't have to report anything to the ASC. So when I look at this slide right here, that any money raised by private issuers isn't reported here because they're not there's no obligation to provide that information to the ASC. So private issuers basically are small companies. They're companies that have less than 50 shareholders, and they're selling to a relatively small group of people. So these are people that the directors, the founders, the officers, they know these people. People know them. They're people who are accredited, so they meet these wealth thresholds. They're not selling to the public, so they're not going out and doing, it's getting money from people on the internet or on the street corner at a hotel investment trade show kind of thing. So private issuer is the whole accidental compliance because there's actually no obligations to provide any disclosure. They don't have to collect a risk acknowledgement. They don't have to make a report to the ASC. So they're kind of like operating in a way under the radar. They're not doing anything wrong as long as they fit within this exemption. They're complying without even knowing they are. Another common one is the friends and family and business associates exemption. So people will often use this. They do have to report use of this exemption. They do have to, in some provinces, they have to collect a risk acknowledgement from their investors. They can do voluntary disclosure, but there's nothing required for them to provide. The main thing is for this exemption, you can't be paying any kind of commission or fees because presumably these people are your friends and family and your business associates. So you don't need to pay someone to find these investors. Accredited investor, again, this is where all the money is, by far the most widely used. And the company can sell to these groups of people, but also the shareholders can turn around and resell their shares. So this is one place where in the private market, you're not stuck with these shares that you bought of a private company. If you can find another accredited investor to sell the shares to, you can. So accredited investors can trade amongst themselves. They can trade shares of private companies amongst themselves. For an individual to be accredited, they have to have net financial assets, realizable financial assets. So you can't include your house in that. Greater than $1 million. They have a net income greater than $200,000 or $300,000 with a spouse, or they have net assets greater than $5 million, and in that case, you can include assets like your house and land and your vacation property and things like that. So accredited investors, either kind of larger financial institutions. You could also have an entity owned by accredited investors. So sometimes you put together a special purpose vehicle to then go and make an investment, but it's owned by accredited investors. And in this one, there's no offering document. You can do voluntary offering documents. You don't have to file them with us. You don't have to do an offering document. You don't have to, there's no limits. If somebody wants to, you could take as much money as people want to give you. You do have to, for individuals, you have to get them sign a risk acknowledgement. We have a specific form for that. You're supposed to keep it on file. Every now and again, we'll ask for them to just encourage people to indeed get those and keep them on file. Then the other piece of it here is you do have to be a bit sensible in terms of verifying if someone's an accredited investor. It's, there's not a bright line where it says you have to ask them for their T4 or something like that, but you have to take reasonable steps. And so if it doesn't seem likely that someone is an accredited investor, then the company, before they issue shares to that person under that exemption, would be expected to take some steps to confirm. I think I'm going to skip by the OM exemption. We see that used a lot in kind of real estate transactions, unless anyone wants me to kind of talk about it. But again, there's limits on that exemption. There is a prescribed disclosure document there. Minimum amount exemption is that $150,000, kind of at a single time investment. Crowdfunding is another one. We've talked a little bit about that as well. So this is where you're using a funding portal. It's typically on the internet where someone can just search up and find it and find something cool to invest in and put up to, is it 5,000? Oh, I said 2,500 before. I guess I was wrong. And then there is a higher limit if that person got suitability advice from a registered dealer to say that's an appropriate investment for them. Most of the crowdfunding portals will just set a limit, so they'll only actually allow 5,000. Or some of the portals actually just set it at 2,500, which is actually why because I was on a crowdfunding site, and I noticed that a lot of them just cap it, so they're only ever going to take a max of 2,500 from investors, which the platform can do that. Okay, so self-certified exemption. I really did want to touch on this. So this is one of our new ones in Alberta. So Alberta and Saskatchewan have a self-certified exemption, and Ontario has their own, which is very similar to ours. We did ours first, and then they kind of came out later with a pretty darn close version. And I'm really hoping that over time that these two could get harmonized. But this is the idea that if someone has certain financial acumen, even if they don't meet the financial thresholds of being an accredited investor, that they can come along. So they can be like a CFA, they can be a CPA, they can have an MBA, things like that. There are financial limits with this one. So in Alberta, we say you can only take 10,000 per company and up to 30,000 in total. So they can invest in 10,000 in 3 companies through the year. We do have an exception for qualifying special purpose vehicles. So we will often you sometimes see a corporation that's formed, that corp takes 10,000 from a bunch of different people, and then that corp turns around and invests. So we don't have limits on the amount the special purpose vehicle can invest in an issuer. And when the shares are being issued by the company, there has to be some accredited investors that are participating in that as well. So it's like a tag along. The self-certified investors can tag along with investments that accredited investors are doing. So I think this is cool. It's part of that whole idea of democratizing investment and getting some people into private markets that are very keen to do so, that have some education or expertise, and want to participate alongside accredited investors. So, but with some limits, because of course they're not. Another exemption that we have, which again, this is an Alberta Saskatchewan exemption. It's called our small business financing exemption. There is a prescribed offering document, but it's pretty easy to do. And this will let a company raise money from like the public. So you don't have to have an accredited investor. You don't have to have a self-certified investor. You could have anyone participate in your financing. You can raise up to $5 million from these investors, but you can do a concurrent offering. So you can also have some accredited investors come along as well, and you don't count the amounts they're investing under this $5 million lifetime limit. And we have kind of a two-tiered approach. So for a tier 1 raise, there's no financial statements required, but the company can only raise up to 1.5 million in a 12-month period. And then a tier 2 raise is once financial statements are provided. So again, that's an interesting exemption, but it needs to be local. So the company is Alberta-based and the investors are Alberta-based, or in this case, Saskatchewan as well.
Financial statements audited?
No, they don't have to be audited. The financial statements for tier 2 they have to be reviewed. So considerably easier standard than audited financial statements, and a lot less expensive.
Sorry, quick qualification. So when you're talking about either tier 1 or tier 2, and you're talking about the cap on the raise, like 1.5 or otherwise, 12-month period, but it says excluding purchasers who qualify under certain exemptions. Can you effectively hybrid that? So like in a tier 1, do 1.5 million under this order, but still do the accredited for a remainder for a larger than 1.5? Okay.
Yeah, exactly.
Okay.
So that's why this is why this is useful, so that you can be doing a financing with accredited investors, and then you have some other people that want to come along with this too, and they don't qualify as AIs. You can use the small business financing exemption to bring them along as well. Yeah, so it's helpful. Okay, I don't really have time for the compliance tips and tricks, but basically we do review, like the private markets team, we do review private market filings, and we're looking for quality, completeness, We're looking for things that don't look right, don't feel right. And if it seems like it's pretty sketchy, then we might involve the enforcement division there. The tone that we take with issuers is, to the extent that people are trying to comply, we'll just help them and work with them. And most of the time, if they're not working with a lawyer, their filings are not quite right the first time. We'll work with them to, get them to where they need to be, and then they'll file an amendment and have a compliant filing. So that's the approach we take when we're dealing with people who want to be compliant and are well-intentioned, but they're new at this. Let's see, one thing just to always remember, the obligations is on the seller, not on the investor. So we don't regulate investors, we regulate the sellers of the securities, we regulate the businesses. And then just, to the extent that someone has to qualify, so you're making sure that the person you're selling to qualifies, that's, again, it's on you. The obligation is on the seller. So it's not on the investors. Investors don't get in trouble. Like, presumably they are not lying, but
we'd be clear on that though. So, I mean, if you don't have any information to the contrary and every representation you have, and you've asked them declaratively in a form, are you this, can you stop, or are you still potentially subject because they defrauded you?
Well, so if you have, it goes to, did you take reasonable steps? And this is one of those things in securities law that's gray. It's not black and white. And I know that's like, but it's like, did the issuer take reasonable steps to confirm? So did they have them sign a subscription agreement and the person did check the box that said, yes, they're an accredited investor? Sometimes the subscription agreement, right beside where they have to check the box, it'll have a little thing. It'll say, an accredited investor is someone who, whatever. It has the description right there. So, how could they not see that when they were checking the box? It's the whole, did you take reasonable steps?
Okay, I'm just being sure we don't have to solicit bank statements. Yeah, okay.
Yeah, I know, it's not a black and white in securities law. It's definitely a gray. So it goes to reasonability, but at the end of the day, obligation is on the seller. Yeah. Yeah. I think we already got that. You have to comply with laws, both where you are and where your investors are. And if you're trying to do a really broad raise, it would be pretty darn hard to do that without legal advice. So you go as you go. We have lots of resources on our website, and I will genuinely try to help you. So if you have questions and you're looking for some help as you're going up the raise, sometimes people meet with us before they go and meet with their lawyer, just to get a bit of a overview of what it is they're approaching, and they can often provide better instructions to their lawyer after coffee with us.
Thanks very much, Tonya. Just a quick question on the materials that you might share with the prospective investors, assuming it's some type of pitch deck, and it likely benefits from forward-looking information given the state of the business. What are some of the guidance that you might have in respect of forward-looking information or things of that nature in pitch decks or materials that go out?
So there's some things that you're obviously prohibited from saying. So just make sure you don't have any of those prohibited statements, like we're going to be listed on a stock exchange, or we guarantee. That the word guarantee, that red flag right there. Don't.
Yeah.
That kind of thing. But otherwise, people put in forward-looking advisory. A lawyer can help you draft that, or you could look at forward-looking advisories that other issuers have used and use and modify those. So having an advisory that says, this is the assumptions that these statements are based on, here are some of the risks, and that there's no obligation on me to update unless required by securities law. Those advisories would be good to have.
Perfect. So then, obviously using, approved budgets and forecasts and that type of thing, along with customary forward-looking information disclaimers is a reasonable approach then. Thank you.
Okay, we are a minute over. But if we still have more questions coming in, and Tonya is happy to stay on for a couple more minutes, are we okay to accommodate those, and then we can wrap up?
Yeah, sure. Yep, sounds good. Or just email or call me later too. It's fine.
Okay. Okay. All right. That works too. But thank you very much, Tonya. This has been wonderful. I think my major takeaway is lots of exemptions that private companies can actually utilize or leverage, and lots of nuggets in there on how to raise private capital to grow and scale. So thank you so much for the presentation. As we mentioned, we will have the recording available, and we can share that with everyone registered. I also want to thank the Venture Capital Association of Alberta for putting this together. Alberta Innovates is a member. I'm one of the reps from Alberta Innovates on this, and I sit on a committee called the Public Education Committee. So we will be putting together webinars like this from time to time. So just want to appreciate my committee members as well. And yes, to everyone, thank you so much for spending an hour out of your afternoon with us, and hope this was very useful. I would like to quickly announce that Alberta Innovates and through my team here will be putting together a workshop, an investment readiness workshop in March 27 and 28. So more information will go out. It's going to be 2 days of intensive hands-on information sessions just to really upscale our private capital raise acumen in the province. So more information will be going out very shortly. I'll be looking to have you all back again in the room. It's going to be virtual, so please share that with friends and everyone around and colleagues. But once again, thank you so much, Tonya. This has been wonderful. I've learned a lot, and looking at having you again around, maybe for a follow-on if more questions come up.
Thank you very much. Yes, very, very informative.